Could the 2024 presidential election completely wreck your taxes? The stakes couldn't be higher and the consequences could be even bigger. Whether you're rooting for Kamala Harris or Donald Trump, their tax plans are set to make waves that might seriously shake up your finances. We're talking about changes that could hit your paycheck, your investments, and even the cost of everyday goods and services. In this video, I'm highlighting each candidate's proposals, showing you how they might change your tax bill and helping you understand what these changes could mean for your financial future. Let's dive in. Hi, I'm Noel Lorenzana. I'm a CPA and I try to make taxes easy to understand. We've got an important election coming up and taxes are one of the biggest issues on the table. Now I get it, politics can be a touchy subject and it's easy to get caught up in all the noise. That's why I'm going to keep this as straightforward and factual as possible. The goal here is simple, to help you understand what these plans could mean for you. Let's start with a quick overview. On one side, we have Kamala Harris, who's pushing for higher taxes on the wealthy and big corporations. Her goal is to fund expanded social programs and tackle income inequality. She believes that those at the top should contribute more to help level the playing field for everyone else. On the other side, we have former President Donald Trump, who's focused on making his 2017 tax cuts permanent. But he's not stopping there. He's also talking about cutting taxes even further, especially for businesses, with the idea that this will spur economic growth and keep more money in your pocket. These two approaches are like night and day, and they could change things up in very different ways. First up, let's talk about Kamala Harris's approach. Her tax plan is focused on raising taxes for those earning over $400,000 a year and increasing the corporate tax rate. She's looking to increase the corporate tax rate from 21% to 28%, reversing part of the tax cuts from the Trump administration. She's also advocating for higher taxes on high-income earners, pushing the top individual income tax rate from 37% to 39.6%. Kamala Harris also wants to tax long-term capital gains and qualified dividends at ordinary income tax rates as high as 39.6% for incomes above $1 million. Right now, they're taxed at 0, 15, and 20%. She's also proposing a new minimum tax on the super wealthy. It's a 20% tax on income, including unrealized capital gains. This is for households with a net worth of over $100 million. Okay, this one, the unrealized capital gains, is making the rounds on social media. If passed, which is debatable in my opinion, would only affect the super wealthy, those making over $100 million. Some people worry this could eventually trickle down to everyday folks like you and me, but I just don't see it happening. The burden of calculating unrealized gains and losses every year would be a massive compliance headache, something most people simply wouldn't be able to handle. Kamala Harris also plans on expanding tax credits for working families, like the child tax credit and the earned income tax credit. For the most part, she's continuing along with President Joe Biden's tax plan and adding some of her own plans to the mix. Now let's dive into Donald Trump's tax plan. He's made it clear that he wants to keep his 2017 tax cuts intact, which were some of the most significant changes to the tax code in decades. These tax cuts lowered tax rates across the board and increased the standard deduction, which benefited a lot of middle-income households. I think they were great, and I do hope they become permanent. But he's not stopping there. Trump is pushing for even more tax cuts. For example, he's floated the idea of reducing the corporate tax rate even further, potentially down to 15%. This could be a huge win for businesses, especially small and mid-sized companies. However, it's important to consider the other side of the coin. Critics argue that while lower corporate tax rates might stimulate business activity, they could also lead to a decrease in revenue for essential government services. When the government collects less in taxes, it has less to spend on things like infrastructure, education, and social programs. This could create a funding gap that might need to be filled either by increasing taxes elsewhere or cutting spending on other services. Personally, I think our government has enough of our tax money already. One of Donald Trump's other proposals is to simplify the tax code, which could be a welcome change for many. A simpler tax code would mean fewer loopholes, less paperwork, and potentially lower costs for individuals and businesses when it comes to filing your taxes. Let's talk about taxes on tips. One interesting proposal both Trump and Kamala Harris have in common is the elimination of taxes on tips. Currently, tips are considered taxable income and subject to Social Security taxes as well. Eliminating taxes on tips would mean that these service workers get to keep more of what they earn, which is a positive change in my book. It could also mean simplifying tax reporting for millions of workers. Now, I do have to mention that these presidential discussions around income tax policy frequently become entangled in political rhetoric, with different sides pushing for lower corporate taxes, higher taxes on the wealthy, a simpler tax code, or expanded tax credits. In reality, while the president significantly influences tax policy, they don't have sole authority over tax law creation. As you're probably aware, the process begins in the House of Representatives, it moves to the Senate for a vote, then it goes to the president for approval or veto. Finally, the Treasury Department and the IRS figure out how to implement and enforce the new law. Campaign promises about taxes can be persuasive, but it's important to remember that these policies go through a complex approval process before implementation. Understanding this helps put tax debates into perspective, recognizing that tax policy is a collaborative effort involving numerous stakeholders, not just the president. If you're wondering about my thoughts on Project 2025, I think it's a little far-fetched. Trump said he has nothing to do with it, and I'm not worried about it. The idea of simplifying the tax system to a two-tier tax system sounds good in theory, but when you start thinking about how it would actually work, well, it feels pretty unrealistic. Personally, I wouldn't lose sleep over it. Agree, disagree, let me know what you think in the comment section below. Please do me a favor and give the video a like if you found it informative, and consider subscribing to stay connected. As always, thanks for watching, and see you in another video.